Welcome back, traders. In this week's gold outlook, we're expecting bearish movement followed by a possible bullish reversal. Let's break it down using monthly, weekly, and 4-hour chart insights. Geopolitical calm, with easing China-US tensions and a ceasefire between Pakistan and India, reduces safe haven demand for gold, supporting a potential bearish phase. On the monthly chart, key support levels lie at 3,185 and 3,115. A short-term bullish reaction is likely at these points. However, unless we see a break above 3,500, the macro bias remains bearish. Fibonacci extension suggests a bearish drop toward -3.618 or -4.0 levels, with possible correction toward -1.618 or 1.27. If no reversal holds, we target the R2 pivot at 2,626. The weekly chart shows price in the ICT discount zone between 0.618 and 0.71 levels. A bullish order block and fair value gap are present here, hinting at a high probability reversal. If this reversal holds, targets lie at 3,332, 3,500, and 3,700. We'll need bullish confirmation before entry. On the 4-hour chart, we may sweep liquidity below last week's close. Watch 3,165 for the breaker block and 3,115 for the bullish order block as key bounce levels. The 3,114 level is critical. It's aligned with a 4-hour fair value gap, optimal trade entry retracement, and the daily pivot S2, forming a strong triple confluence. Trendline's TR1 and TR2 show resistance, while TR3 shows support. A low test may occur before May 13th to 16th news, possibly triggering reversal setups. On the 2-hour chart, a bearish order block is broken, forming a new demand zone at the 0.71 retracement level. This could support a bullish reversal. In summary, expect a dip into the 3165 to 3115 area. If reversal occurs, we target 3,500 to 3,700. If price breaks below 3115, the next major support is 2626. This is not financial advice, just my outlook. Like, subscribe and share if it helps your trading journey. See you in the next one.